story.
Yeah.
Thank you. So
It
you
seems
doing my
like
investors.
we gotta put our fund
Yeah.
target
Yes,
to
I
add the
think
new
so.
one.
There you go.
In general, in this metro, so it's you are covered.
Excellent. Thank you. Thank you.
So I think I'm Francis Sheng. I'm representing the MYG Fund Capital, which is a private equity fund and affiliated with the Chamber of Commerce. I think this is a new endeavor for the team, and we're very excited. And especially, I think everybody presented here is that real estate is still very, I'll call that a very optimistic industry, right? People in this industry are always looking forward, and even with some one-off hiccup, you know the future is always bright. So now we have this new endeavor MYG fund, which we're targeting. Essentially we're targeting a 150 million fund. It's a medium-sized fund. It's our phase one. So we're very excited to. Actually, it's fund already registered and launched. We're in this marketing phase. Actually, a lot of investors are already pushing us actually through the wide connection network through the Chamber of Commerce. So actually, the genesis is through the members and the investors, and people want to have this vehicle and platform to get into the U.S. market, specifically the real estate market, and because a lot of the
Sorry, can you speak up a little bit?
yeah.
Thank you.
Sure. So actually, it's driven by the members and the investor to this market. And so what we're seeing is a very strong and exciting path of the life cycle. So we see a lot of opportunity. We have done tons of one-off projects with the investors, either individual or institutional investors. And then people started asking us to do a more programmatic way. So then we have a longer-term relationship with the developers and the co-investors, and so we can serve our customer better. So, sorry, go back. So one of the areas that we built a very strong team. So the fund, we have the core member team, roughly about 10 key members, are all very, call that real estate veteran. A lot of people from the institution, the big U.S. institution have tons of real estate background. I would say average about 20 years of experience in the industry. So people provide a lot of experience in this industry. And we develop a very prudent, conservative strategies. In a way, looking at a target return, not aggressive, but a very beautiful return is about 15 to 20%. So in a way, to accommodate the investors' needs and also reduce balancing risk. Very high level, I think it's not news to everybody, but I think when you do a real estate fund, you tend to look at the general, the macroeconomic. And so a lot of the beauties we look at the U.S. macroeconomics is that we're still in this long trend of recovery. And people are asking, okay, how many years still remain? And it's tough to say, right? So we may, we're definitely off the trough. Are we peaking now? Probably still not. A lot of indicators, we still have a lot of steams in the economy. The interest rate is still very low. The job, we're still improving. There's still a good trend. So we can see the economy going to a more positive trend. And also from deployment, that's the key foundation for the real estate market, is that you have good economy, good job market, then you know that your real estate price and return will be there. So just repeating some of the general observation of the U.S. market, and we'll continue to see that the additional demand get into the market. So driving one of the audience that the cap rate actually about the price. Sure, we'll continue to see the trend actually cap rate is compressing. So the price is increasing. So which is very healthy for a lot of the products, which you can see the good returns. But in the meantime, we see there's also a challenge from the financing world. We definitely see the banks tightening the lending financing format, so that we see there's a ton of opportunity, and definitely the job, continued growth of the economy will help the trend. A couple of sectors we're looking, but it's not just limited to. So the hotel is definitely a very vibrant sector we're looking at. We had a couple of good relationship with the hotel market to see continued increase of occupancy and also the daily rate. So we see that's a very healthy sector. Retail continue rebound of the consumer spending. What will drive the retail sector. And one sector we spend a lot of time on is the senior housing. Actually, it's tied into the both general macroeconomic and also the demographic trend of the aging society. So we see that as a very attractive sector. Plus the condo market and multifamily market, which is also our focus, because it's really a bread and butter for a lot of the real estate developer, and so same for us as a private equity fund. Some of the strategy we focus on basically the tier 1 and tier 2 cities. So tier 1 definitely including New York City, that's our home base, and some of the gateway cities, and also a lot of the institutions will also focus on the southern states in Texas, some of the key secondary market, the Houston and Dallas. And in terms of the strategy, we probably, I would say, will focus more on this side of the coin, which is the development and also the opportunistic type of deal, which can generate a good return at the mid-teens. A lot of the core, we call it core or mature market, which right now, because of the pricing pressure, so it's really very hard for us to get into that market, which have a very, I would say, challenged return market to find a double-digit return. But it's also very safe. And so we talked to some of the big institutions from overseas. They tend to be okay with a single digit and return and a little bit longer term horizon. So I think for our fund, I think really the focus will be on, I would say, from the middle to the right side of the equation, so we can balance in the market and risk and returns. Manhattan Hotel, which kind of this a little dated story. When we first created, the market was so good, literally about 12 months ago. And then I think the wind definitely shifted down a little bit. There's a little oversupply. The banking lenders are concerned on some of the properties, so there's an overview. But we see the long-term trend for the city is still the top tourist destination. Long-term, I think we're committed to the sectors and also the market. Senior housing, I think this is no-brainer. We did tons of research, and it just across the board, it gives us a very wide choice to select in the different markets, different sectors. On the average, the return is higher. I would say from the cap rate or cash return, roughly the same market, same quality. We have about 200 basis points difference compared to the single vanilla multifamily asset, and it's a very segmented market and also marketplace. So we feel like this is a great place to play, and then this is a game. Hopefully, we can play for at least 10 to 15 years to hit this sector. Some of the examples which were already invested with our prior investor relationship, I will continue to build in this segment. One of this in the city, luxury boutique hotel, great location, have the retail component. We see this return can generate very healthy return, close to the higher 20s. So we see this will be the example. We'll work with the local developers in different market segments to continue to focus on this strategy. This one example we already in our pipeline is I call the secondary senior housing market. Very similar. This can be a regular multifamily asset. But since the senior housing, so it gives us a little bit better return in terms of the IRR forecast, roughly about 23%. This just generally gives a good demographic focus because the Dallas area is a very kind of a better, milder climate, and so tend to attract a little bit more the retirement population and also lower tax situation. So I think these will be the consumer focus. And this is our contact. We're based in New York, and then we do have a team in China. So we are actively doing a fundraising. And I think for this opportunity, either you're an equity investor, you want to work with the fund, we'll welcome you to contact us. Or you're a developer, or you're from the city government, and you have a project, you want to look for equity funding, or even mass funding, because in the meantime, we also have an EB5 regional center, so which, as Leslie presented, a lot of EB5 money, we can provide basically the full scale of the capital stack to a lot of developers. So hopefully we can have the run together, and we are very privileged to have this opportunity and to start this journey with everybody. Thank you.
Thank you.